Hi, I'm Matt Liebman, one of the founding partners here at Amplius Wealth Advisors. Today, I want to discuss some of the key principles of our core investment philosophy here at Amplius. First things first, the most important investment decision that any investor will make, in our opinion, is their asset allocation. How much money are they going to allocate to stocks, to bonds, to cash, and to other assets such as alternatives? In the general investment community, and I'll include in that advisors, clients, individual investors, institutions, and of course the financial press, there's a lot more attention paid to two other factors: market timing and security selection, which we feel are far less important. At best, they're a distraction, and at worst, they can actually cost you a lot of money, whereas asset allocation is the crucial decision. So let's talk about that a little bit more. And let's use what I would call the cocktail party theory. If you're sitting at a cocktail party and somehow investments or money, those types of topics come up, it's pretty interesting to say to somebody, I invested in XYZ stock back at the beginning, and now it's gone to the moon and it's made me a fortune. Or let's take the market timing side. Right before the crash, my advisor got me out, or I knew something bad was coming. You've probably heard of these types of conversations before, and I got out. Those are really exciting conversations. Unfortunately, they're largely not true in most cases. I find most people are exaggerating and or outright just making up tales when they're telling these stories. And two, they're really hard to replicate and they're not a sustainable long-term investment strategy. Now, let's flip that around. You're sitting at the same cocktail party and you say, I worked with my advisory team to develop a financial plan built around my goals. And through that plan, we developed an asset allocation that we think will help me achieve my goals. And we monitor it over time. And I'm very comfortable with it. By the end of your conversation, everybody you're talking to is half asleep. So again, what I think we should be doing, we always talk about the balanced, boring approach to investing. Let's focus on what actually matters, not what makes a more exciting story at a cocktail party. What actually matters is asset allocation. There have been all kinds of academic studies that have backed this up, that a good chunk, let's say 80, 90% of the variability of long-term investment returns is dictated by asset allocation, not market timing and selection. And let's just think about it logically. You could have the greatest investor in the history of the world managing your stock portfolio for you. If it represents 3, 4, 5% of your wealth, it's not going to have a big impact on your life. And let's flip that around. You're going into one of these bad periods like 2008 with the global financial crisis, 2022 when rates went up, these years where the markets went down a lot. If you had, let's say, 95% of your money in stocks, it almost doesn't matter which stocks you were in, you were going to lose a lot of money that year. Now, maybe that's okay for your financial plan, but what's really driving the bus, what's really driving your long-term investment returns is, again, how much exposure you have to stocks, bonds, and other asset classes, way more so than which stocks, which bonds, and market timing. That is the core of the first principle of our investment philosophy. But let's get to the second principle, which is as important in our opinion, or let's call it 1A, if you will. That is investor behavior. Over the course of one's investing lifetime, which could be several decades, maybe it's 20 years, maybe it's 50 years, maybe it's 80 years. Everybody has a different investing lifetime. But over the course of one's investing lifetime, almost certainly you are going to see bad markets, whether it's a stock market crash, a bond market crash, some issue in the commodities markets. You're going to see ugly markets. And what we have generally found is that investors who sell when those bad markets happen, who abandon their plans at that moment, tend to fail to reach their financial goals. Those who hold on and ride it out usually do fine. And those who really thrive, those who really make the bigger money, are those who are able to buy and take advantage of those situations. So what we generally try to do here is we try to have our clients focused on being either holders or buyers at that moment. We don't want them to be sellers. So how do we do that? It's not that complicated. It's one of those things that's, let's say, simple to describe, but not easy always to execute. So the first part of having good investor behavior is having a sensible financial plan built around your financial goals, your risk tolerance, your cash flow needs, your time horizon. We have several financial planners here at Amplius that help our clients put together those plans. And then the second piece is having an advisor or advisory team that you trust. that when there are ugly moments in the markets or really scary moments in your life because something's going on, that you can call them up, you can meet with them, you can Zoom call, whatever the medium you choose, and have a conversation with someone you trust to help influence you to make the right behavioral decisions. So again, the two key parts to our investment philosophy are disciplined asset allocation, focusing on what matters, not what's exciting to talk about, but what actually matters, and then having solid investor behavior. Now, is that everything? No, there are other things. I'm not going to give you an exhaustive list, but those are the two key ones. Just to add a couple more, you want to keep investment fees reasonable, and you want to be tax efficient in your investments so that, again, nothing against the government, but that you keep more of your money and less of it goes to the government, and you manage your money in as tax efficient a way as possible. Those are just some initial thoughts on our overall investment philosophy. If you'd like to discuss this in more detail with us, give us a call, reach out at any time. Thanks again.